All right, looks like we are set. So let's go ahead and get started. My name is Jared. Welcome back to a new year. Welcome back to Engineering the Markets. It is currently January 3rd of 2023. So as we all know, we're starting off a new year with little bit of reflection and maybe some reevaluation on what to expect for the marketplace as a whole, or we're looking for opportunity in regards to some new ways to trade or some new areas to focus on for at the very least the beginning of the month and into 2023. So welcome back, and we will cover, for the most part, some of the same topics that we often do here, but we're also going to be changing up some of the format a little bit. For this particular segment, I will be going into a little bit more of a structured approach week after week. We'll talk through that this week, and I'll actually have some examples as we move forward. It is a shorter week, so this scheduled approach doesn't really work well whenever we're starting off on Tuesday. But all in all, that schedule will kind of take effect as early as next week. So with all that said, since it is a new year, I figured we'd start off at a pretty high level in regards to the technical and just the overview of what happened last year. This is using the SPX index, or the S&P 500 index, and barring some of the weekly expected moves, which it's hard to kind of hide all of those data points, I do have the yearly close marked, which 38.39 was our 2022 yearly close for the SPX. So what you'll notice here is marketplace as a whole for the S&P was mostly bearish. We saw a year of significant decline from a percentage standpoint. The SPX not necessarily being the hardest hit, but seeing similar degrees of volatility, especially as we were retracing or putting up any sort of downtrend in regards to the bigger weekly and monthly bearish channel that we traded throughout the year. Additionally, from a pricing perspective, the SPX mostly gave up 2021's performance. So as far as the price level of the SPX, you can see that from a technical perspective, this is, for the most part, a major engulfing structure. We obviously collapsed a lot of the strong performance in 2021. And while we didn't close below 2021's low, we did spike through it. So we did have a breach of 2021's low, and that is marked here at 3662.71. That was essentially marking very close to the lows of 2022, which, if you recall, was the October low. And this, of course, was facilitated by a CPI print that actually sparked a let's see, it would be a fourth bear market rally, at least in regards to some of the bearish channel performance. I think that's the fourth. It's hard to remember some of the swings. But all in all, performance here was bearish. We had a negative year. The S&P was down approximately, and for this, you can certainly pull up other tools, but measuring from something like open to close, or even more precipitously from high to low, you can see that last year's performance on the S&P was close to down 20%. I believe year to date will start to anchor a little bit closer to this year, and actually might be a little bit of an issue just because we just started. So let me avoid clicking that for now. So 1 year performance of about 20% to the downside. Also, as we've discussed before, sector performance has been fairly skewed last year in regards to which sectors not only outperformed overall, but also what types of sectors they are. The I would say the basket and the perception of risk in those sectors. Energy, of course, being the only really bullish sector, the only one that actually had green or positive performance. But throughout the year, there's been some massive recovery and, of course, large retracement sizes in utilities, healthcare, and staples, just kind of marking the top three. This, of course, being a very defensive looking sector performance for the past year. And if you correlate that, or you flip it and look to see what the worst performing sectors were, really the theme should be not surprising for last year because of the type of risk factors we had to experience. Higher inflation led to a more hawkish Fed. More hawkish Fed led to very quick and precipitous interest rate hikes. And for the sectors that are most affected by that, we do have technology, consumer discretionaries, and then communication services. You kind of lump that into some stronger growth sectors, along with the type of exposure that these companies tend to have. You'll also notice real estate, once again, somewhat tied to the yield curve inversion and just the strength of the yield increase in something like the 10-year interest rate, which is kind of a corollary to how mortgage pricing and some of the borrow rates are going to be affected. So that has been the theme for last year. It has led to a lot of significant underperformance throughout the market. But as we note, we're coming off of a very strong secular bull market. Basically, it was about a 12 to 13-year bull market since 2009. And for that purpose, this is notable give back, but it's also relative to outperformance over the past 10 to 12 years. You could also start to do this evaluation through the NASDAQ, and here's where you start to see the real damage that was done last year, especially in what stocks were affected the most. As you can tell, this is a much more convincing, engulfing type structure, more from a technical sense. The NASDAQ not only gave up all of 2021's performance from a pricing perspective, but we even breached into 2020's performance simply because of the strength of 2020 and 2021. There really wasn't a lot of overlap except for this period right before we started 2021's continuation rally. So about a 50% breach into 2020, just relative to the entire year's range. Additionally, just starting to note that we saw some amounts of defense in regards to resistance and support relative to some of these yearly highs, lows, and closes. So as we dig into shorter time frames, what you'll notice is as you're starting to mark just very simple yearly high, yearly low, yearly open, and yearly close, the correlation and the effect that it has on some of the shorter term trade, you want to be thinking maybe some weekly and daily trends, does have some impact. The yearly levels are quite powerful in regards to inflections and even starting to mark things like resistance and support. For example, if I were to mark the low of 2021, which here, I'll just make sure I have that anchored correctly through price, 45. And additionally, there's another price level. It's about 260.12. You could call it 260 just for ease of use. What you'll notice as you dig down into maybe a daily chart, and I'll just kind of extend this out to the left, is the yearly low from 2021 has had a significant impact to not only 2022's performance, but it marks areas of risk. What you'll notice is some of our larger reversal structures built their neckline against this price level. Additionally, some of our bounces took place here, and even more importantly, the types of breakout levels all coincided with this inflection. It's of course anchored here due to the pullback in 2021, but you have things like your inverse head and shoulder, or sorry, this is just a head and shoulder. That's your risk level. It's also the breakout point as we were starting to consolidate from the June low. And then more importantly, notice what happened recently. We actually rejected 2021's low on the most recent bull counter rally, or bear market rally, if you will, if you're still in that sort of weekly channel mindset. So the relevance of these yearly levels, and one reason to maybe have them marked almost at all times, I mean, there's only so many that really coincide with the price as of now, is because of the impact that they can have to the marketplace. And more specifically, they can drive future trade. What the NASDAQ is showing us at the end of 2022 is not only that we're trading under 2021's low, but we're testing it and rejecting it very strongly, which tells us not only that the market may have lower to go, but this rejection identifies a risk level. It tells us that if the market were to ever change its bias, we would need to clear that high. We would need to get back into a structure of strength in order to even trade throughout 2021's price levels. Otherwise, we start to evaluate new levels of low support and resistance. And that's, of course, where we start to see levels like 260. Let me pull up a weekly here just to kind of show where that comes from. You'll notice that there is a lot of confluence here around 260. If I dig into a daily chart, it's a little bit more convincing as well. But most of this is coming off of some of the relative lows that were defined back in 2020 when we started to consolidate right before the election results were announced. And while this is just the NASDAQ, what I'm showing here is an index that is down more than the SPX, that is down more than something like the IWM, although the levels have been breached, relative to their time frame. And what's important to note here is that if we continue to see the type of performance that we saw last year, these types of levels matter. They make an impact to future trade, and they also can help us understand what's been given up, what has the market retraced, and where are we now in regards to 2023. So if I were to dig in here, I would argue that 262.63 is pretty important. You'll notice the NASDAQ has skirted that price for a couple of levels. But more specifically on the shorter term, there is a price level here at about 260.1 or 12, depending on the platform. And what you'll notice is the short-term trade has been hanging on by a thread right around 260. So, as we kind of dig lower and lower, more levels become apparent. But additionally, just note that this is not just a daily level. This is not just a weekly level. To some degree, these are yearly levels. These are multi-week, multi-month performance of support and resistance, defined trade that is either rejecting or accepting. And in the case of the NASDAQ, we have a very clear yearly low rejection, which is why this is such an important anchored high. the fact that we're reacting here is much more important for the future of this year. And then, of course, as we kind of shift into some other index products, you'll notice things like the IWM, which I'll kind of remove the noise here. It's a little bit more volatile. It's obviously got that same engulfing, but notice here, not only are we breaching into 2020's levels, we actually came into the highs and closes of 2019. And that has been essentially where we have stopped our retracement for the time being. We've basically given back almost 2 years of performance, barring, of course, the pandemic drop, which, of course, was a pin bar in regards to a yearly chart. So remember, same concept here. Mark these levels. There's not too many of them. And for one, if you're looking for high types of high degree of strength or just conviction in trades, anytime we see strong acceptance or rejections of yearly levels, we know something much bigger is going on. And that often can drive a trade for much longer than just a couple of days. We'll be looking at things like weeks and months to kind of hold these trades together and keep the trend or the momentum intact, depending on the setup. And then, of course, the last but not least is the Dow. Now, the Dow technically retraced, and I'll just kind of leave that low intact, technically did retrace into 2020's open. But as you'll note, that was the low. One of the reasons I left this level on is because of how precise it happens to be. You'll notice in 2020, we opened at 286.44, and I'm just using the DIA. You could, of course, use the index. And then, of course, the low of 2022 is 286.62. So barring a couple of pennies, we're talking about inflection levels that have avoided things like the Dow tracing lower. And then, of course, we see the type of outperformance that we're getting over the past couple of weeks and actually months. The Dow, of course, being the least impacted index for 2022, at least in the U.S. markets. And that, of course, is still an index that is down on the year, but of course is down the least. So it's all relative to the other types. So what's important about this? Why should we go through this exercise? Well, for one, I just showed you a couple of very clear trade events that took place off of yearly levels. They're very simple in the fact that there's only 4 per year: high, low, open, and close. So if you want to mark them, if you want to see how price is responding to them, and more specifically, if a setup occurs next to them, those often can be fairly well trusted, at least for something to the equivalent of a normal trade, just taking the risk of that setup potentially working in your favor. But additionally, you can start to think about if prices don't want to go into certain yearly ranges, what does that tell us about the future? If the NASDAQ is rejecting all of 2021's performance, the entire yearly candles range, what does that tell us about the future? It tells us that there might likely be more downside. There's probably more fear and just underperformance in the NASDAQ to come, at least in the short term, because we have a very strong anchored rejection. And the market has told us that the NASDAQ does not want to trade at those prices anymore. It wants to either go lower or trade sideways. Similarly, with the Dow, you'll notice things like these strong reactionary bounces. It tells us that that's a defendable level. It tells us if we ever get close to those levels again, we'll start to look for similar types of defense, because the market has already showed us that the Dow at least doesn't want to retrace into 2020's pandemic lows or some of the retracement lows from the pandemic. it's essentially a gap fill on the daily, but on the yearly chart, you can see that it corresponds with the open. So I've got that marked. For some reason that looks a little weird on the daily. Yeah, so our open here, 286.44. It's because I need to go back in time. So it's somewhere back here. I actually need to shoot this out. Yeah, that's what I'm doing wrong. So, it's basically saying that there's a shelf here. There's support, but it's the type of support. It's a multi-month support. It's a bit of a daily gap fill, but it's also an open. It's an opening price. And that's where the market says, you shall not pass. You shall not go into this range. And we, of course, saw the bounce performance, most notably coming off of the CPI high. Or sorry, the CPI low. The low that made a new high. So as we get into shorter time frames here, the exercise that I'll kind of allow everyone to take is, if you don't have these levels marked, the question is why? They're very important price levels. They have impacted trade as of last year simply because the market has retraced. We were in a give back period. And with any give back period, we have technical rationale and support and resistance from previous weeks, months, years that are going to define future trade. We know this to be true because we have examples. So at the very least, we have some sort of proof that this is how the marketplace works. And to some degree, there is defense and repetition to how the market can respond through price. But all in all, this is something that I'd like for y'all to do. We'll come in tomorrow and look at, of course, where they are. I'll have them all marked for tomorrow. But more specifically, how can we use them in the future? Because the question then becomes, what do 2022's yearly levels tell us about the future of this marketplace, and where are we headed into 2023? We have a new yearly candle, so we may as well mark those prices as well. Now, as we get into the short term, we're going to just start with what we always do, which is look at the weekly expected move for the SPX. Now, for those who are just joining us, or maybe have forgotten how this works as of last year, it's a new year, so I'll give you all the benefit of the doubt. All we're doing here is taking the SPX, which is a very heavily traded index product on the option market side. And it's also where a lot of professional trade goes for hedging, for any sort of defined risk. Even some speculation takes place here. And it's just one of those markets that drives a lot of price volume. It's technically still about a $3,800 product. Therefore, the option contracts on here are notionally very impactful. They have a high impact through price. So knowing this information, we go to the weekly expected move, which is simply the weekly series of the option market on this index. We allow, a little bit of deviation here because we are starting on Tuesday. I'm anchoring this to the weekend just to make sure that no trade has taken place. It's all settled out from last year. And what we're looking at is, what is the expected move? The expected move is simply it's basically a derived value from how option calls and puts are priced. It's based on a model of how option markets price in general, the Black-Scholes model. But more specifically, it's where risk is. If the option market says that the product in question is going to move X amount with a certain amount of statistical probability, and you can see this through things like at the money straddles, which now we want to get the kind of close to put call parity here. So let me go ahead and just grab something like the 38.45s. That should be pretty close. The area, the at the money straddles where you buy a call, you buy a put, sell a call, sell a put, doesn't matter. Where is the risk? If those are priced at some value, you know, the at the monies should be close to put call parity in terms of their pricing, then it means that the SPX expects to move a certain amount on that series. You know, in this case, we're looking at Friday, so it's our weekly series. That number this week is approximately 84 points. You know, the at the money straddle is a little bit of a dirty way to do it. It's not going to be exactly precise because the index is not technically at that price as well. But even this implied number is also not exactly right. It's just the most accurate one that we're going to use. And therefore, what we do every single week is we look at the SPX and say, where is risk? Where does the market see volatility? And if that breaks or breaches, what starts to happen? Do we see volatility expand? And that means that they see risk. They, being the more professional trade, sees more risk in the future. IV should expand. The expected move should expand. You know, shorter term trade gets a little bit trickier. Or are we staying inside the box? And if we are, the market has priced a box already. We have our box defined. And that box is based on expected move. So anytime we look at these levels, and in this case, what I've done is I've marked Friday's close, which happens to be the yearly close as well. I've marked the weekly high for the expected move. I've rounded up by 50 cents, 39.24. And then I've marked the weekly expected move to the downside, 37.56, rounded up 50 cents. So all of this is just relevant to volatility. This is what the market, from an option perspective, thinks that we're going to move. As long as we stay in the box, market for the most part is happy. It's defined. It has the risk understood. It priced it accordingly. But if we get outside the box, it means that something more impactful is happening. The prices are deviating from what was priced. And that can give you a lot of edge as an option trader, understanding where volatility is higher. Therefore, to be careful in the short-term series, selling premium or just being some sort of income generating strategy in your portfolio, along with staying inside the box, which tells you that for the most part, volatility is right and pricing, you know, stays confined. It stays within the boundaries. So with all that said, this is what we do every single week. This is a number that we have in our charts to keep us informed, keeps us understanding where trade should be occurring, where trade can go. That's important as well. Where can we go to? What would be normal? And if we go there, what sort of technical structure do we have? We have potential for breakdown if we do make it to the lower boundary. We have potential for breakout if we make it to the upper boundary. And of course, we have potential of back test if we make it to the upper boundary as well and see rejection. So all these kind of keep us aligned to what's possible on the week. So with all that said, my name is Jared. This is Engineering the Market. Stay tuned for Pre-Market Prep with Carlos and Norm. Happy 2023 to everyone. Stay tuned for more and a more structured approach. We'll talk more about that throughout the week. See y'all tomorrow.
All right. Good morning, everyone. Welcome to the pre-market prep. Oh, hold on. I'm getting some echo here. 1 second, guys. Okay. Are you guys getting an echo? I think it might have fixed already. All right. 1 second. All right. So you are getting an echo. All right, it's gone. Yeah, I think I heard at the beginning, but I think I figured it out. Guys, good morning, everyone. Welcome to the pre-market prep. Hope everyone's having an amazing morning. Hope you guys had an incredible New Year's Day, New Year's Eve, and hopefully you everything was great over the weekend. So, guys, big thumbs up for Jared engineering the markets every single morning as we kick off this 2023. Happy New Year, Norm. Good morning. How are you today?
Morning, brother. Sorry I'm a second late. The
No worries.
risk manager woke up right as I was coming on, so sorry about
All good, all good. Um, Gotta make sure the risk manager it's up to check how you're doing. Um, all right, guys, let's go ahead and get things going over here.
that.
I
Seems
do
like we're
have,
having some sound issues in the room.
yeah, I have something funky like a choppy audio. Okay, hold on. Let's reset the audio bridge here. Let's
Okay,
do that.
I'll do that real quick.
Okay, excellent. And I'm just gonna um turn off my mic for a second here. All right, YouTube should be perfectly fine. Just want to get a confirmation you guys are good, and we will just take care of it here in the room. I think seems to be the issue. All right, checking. I room, you guys are okay? Okay, good.
You're not on in the room.
All right, let's go ahead now. All
There
right,
you
so
go.
I'm back on in the room. Um, let's make sure that sounds okay.
All right, looks like we're
Okay,
better. Awesome.
okay, perfect. All right. All right, guys. Let's get started here. As usual, we'll get into our gappers list this morning. See what's happening there as we kick off this new year. At the moment, I am seeing that we are a little bit on the green side of things right now. So a couple of things over there, and then we got some stuff in the red. Tesla being one of our most active stocks for the last I want to say last quarter at least.
Yeah,
Seems like
for
right. I
sure.
mean, um,
It's been active all year, really, but it's been the standout in the last quarter. That's for sure.
Yeah, yeah, absolutely. So here, guys, you're seeing Tesla has just been incredible. So in play today, already 5.7. That's gapping down 4.1. We'll take a look at that and we'll dive into some of the stuff that's gapping up on our list as well. Again, we got quite a few things there. But before we do that, let's head over to our market post. Norm, anything happening today or that we should look forward into this week?
I mean, as far as data today, we're still in the period of the when the Santa Claus rally is expected. That would be today and include tomorrow as well. Haven't really seen much since of that, but we'll see how the next couple of days go as we turn the calendar and start the new year. Today, S&P US manufacturing PMI, the final read, 9:45 a.m., 10 a.m. construction spend. Really, the big and motor vehicle sales, since it's the beginning of the month, they'll trickle in. The company's announcing how many units they sold in December and therefore the quarter and the year as well. Big news tomorrow, really. FOMC minutes from the meeting they held in December will be released. It will be interesting to get a read on what the board members were thinking as they voted on policy a couple of weeks ago. So get some insight into that. We also have JOLTS, some labor market stuff tomorrow. So that could be interesting as well. And then, of course, employment numbers later in the week with ADP on Thursday, and then the payrolls number, non-farm payrolls and such for December on Friday. So yeah, we got some stuff sprinkled throughout the week. Not too much today.
All right. We'll definitely look forward to some of that stuff throughout the week here as we get into this week of trading. Uh, All right, let's dive into our gappers list, guys. Let's look at what's gapping up this morning. We have GRR is up 46% right now, 862,000. Norm, there's some kind of action happening here. Anything good on this?
I'm not seeing any fresh news as of this morning. So I'm sure there's something out there. Not quite sure what. I'm not really familiar with this one. This is a recent de-SPAC, it seems, not too terribly long ago. Um, so
Yeah, so nothing great there worth watching just yet. Again, guys, I mean, there's not much going on here right now. You just got one candle that
yeah,
created an
it
entire
blew up and
range.
then it's just kind of
Yeah,
sat there and done nothing. So
and it's gone flat for the most part. And the float on this is 37, so not a low float. But we need more information on this. Right now, it's again, it just has a range with okay volume. Nothing to really look at the moment. We'll come back to that. COSM this morning. This has been on our list more often than I would like. And I wanted to avoid this one this year. But this year, again, I'm not sure what's happening. 11% up this morning. Again, pure garbage, guys. I don't think this trades well. LI this morning, they're up 6.2, light volume, and we've seen this quite a bit from LI, man, where they're gapping up, a 5%, 6%, 3%, and they go flat for the most part, and they don't do much at the market open. So I don't know what's causing these gap ups here and there. And look at the daily
well,
too.
as I mentioned, they've announced their sales for December, both them
Yeah.
and XPEV, Neo. So that's why those three are on the list this morning.
Okay, gotcha. It's just been trading horrible, this one, out of all of those. I think it's probably one of the worst ones. So be careful. I'm not a fan of it this morning. Let's take a look at XPEF. Same thing here, gapping up 6.1, 515. Maybe XPEF with that news, Norm, maybe they'll do something. But again, not a heavy like to that this morning. Billy's up 5.8 here, 257,000. We'll just have to wait and see. I like the daily on Billy for a possible breakout. So that looks nice. We've been going sideways here for quite some time, almost all December, not really doing a whole much. So if we can get going here, that'd be nice. We're pushing up against that level. So maybe a possible on Billy. We'll have to take a look. Here's SQ, which I have not looked at. Have not put SQ on my list in a long time. Any news, Norm, this morning? They're up 4%. Light volume, though, on SQ today. So not heavy volume at the moment.
They got an upgrade this morning
Yeah.
out of Baird. Two outperform from neutral. $78 price target from 62. So
Yeah, I like that. I like the move we have here. Not great volume right now, but again, typical New York Stock Exchange ticker. They don't get
you'll
great
see.
volume,
Yeah,
So
it
we'll wait.
trades. It can trade okay after it opens. It just
Right,
usually isn't
right.
great pre-market. I will note also you've got PayPal a little further down the list that got an upgrade from a different analyst as well.
All right, we'll add PayPal here. Also, we'll put it on the main. We can always move them down if we don't find something better. So far, this list not looking great, guys, to start off this week. Let's head down towards the bottom. We have
Better than what we've had the last few weeks.
oh yeah, I'm not complaining. Not looking great, but better than what we had the last especially that last week. Last week was something else, man. Here's a few Chinese tickers coming up. We have Neo, PDD, Baba on deck. So Neo this morning, again, they got this gap up of 3.6. They have the most volume right now, 1.3 million. But these guys have not been trading well. So I'm not a fan of that right now. PDD also, again, light volume. You got the 3.4 gap up, just not a whole lot of volume right now. Baba, out of all of these, is probably the better trader to look at. If I'm going to look at something, it's going to be Baba. I think they trade the most decent. If these things are going to be in play, I think this is the one that'll give you the best opportunity, right? If that's going to happen. PayPal we just talked about, so they're up as well. I do like PayPal. It can trade very well, but another one that you kind of have to wait for the market open. They don't give you a whole lot, kind of like SQ. They don't give you a whole lot in the pre-market. So we'll wait for those to get going here. Last on this list is Plug. And again, gapping up slightly here, 2.3. This has not really been in play. And I don't see anything great that's making this stick out this morning. So well, we'll skip on that one. So that's our gap up list. Again, a whole lot of tickers, but not a whole lot that looks great. On the downside, Tesla, of course, we're going to put on our list here. Tesla has been just incredible. So we'll add Tesla there. 5.9 right now, down 4.3. And it seems we're finding some kind of support There's a lot of also a lot of stuff coming out now. On is it the time to buy Tesla, right? As we're trying to find some
They got
support
a
here. So,
downgrade this morning.
oh, that's not good.
They announced their deliveries for December, which were pretty decent, and their year was good. But they came in a little bit short of analyst expectations as far as total vehicles in fourth quarter. So that, and I believe they got a downgrade this morning as well. So
Okay, all right. So not good news for them. Now I wonder, um, you know, you got a downgrade, but you've been down so much. Is it lower? Do you know the price target of some of
oh
these
yeah,
downgrades? It's
yeah,
much lower than this,
it's lower.
like 50?
I don't think it's that. I don't have the number in front of me.
Yeah, but it's lower than this price now. Okay, gotcha, man. That's not
Yeah, oh
good.
yeah,
That's not good.
it's lower.
So yeah, so Tesla's on here, guys, and then we have Kala. What is this all about? So Kala this morning we are down 10.6, 432,000. Nasty daily. Just started to get going really. Three trading
Yeah,
days
so
ago.
biotech that started popping a few days ago, and it's up so big. I mean, this thing is you
The
got to
spread is
watch out
ugly.
for that.
Yeah,
Very
this
very small
is
float.
yeah, yeah. And you're not trading heavy volume, guys. I mean, you're down 10% here. You were in the green, probably up 10%. You're probably down 10% now. And only 433,000 shares traded. And you got this big range like that, from 47 to $32 is your low. Got to be careful with that. And the spread right now at times, that looks good there, 1 cent, but it was like 30 cents plus earlier. So um, this is dangerous stuff. All right, let's take a look at what else you guys have on your end? That's our list so far. Someone's saying, what about? Yeah, we looked at girl here. This one is, again, we just need more information. You'd really have not much going on here besides this one wick here. Other than that, there's not a whole lot happening there at the moment. So,
It's up big. It's just not getting any movement now.
right. So it's kind of went flat here for the last, actually, since it opened up, really. It
Yeah,
had
right.
one thing
Ever
and
since the
hasn't,
first few
yeah,
minutes.
hasn't done anything. So let's take a look on how that goes there. Norm, anything you like this morning?
I don't know if you looked at coin.
No.
Coin popped up on the list, gap up since I think you've been on it, and CCL as well. I'm not a huge fan of either. I kind of want to see how things play out. People
Yeah.
have been away. The
Yes.
markets have been a little funky the last couple of weeks. I want to see if we come out of the holidays. I want to see what the market starts to act like this morning.
Yeah, I
I think it's
agree.
going
I
to take a
agree.
little bit.
Yeah, yeah. Kind of shape out what this market coming into this 2023 looks like with all some of the stuff that have been beat down quite a bit. Like you said, many people out. Yeah, it'll be interesting. Just kind of sit back and see how things work out here. So, continuing, guys, with what we did all last week and seems like the last 3 weeks. Just be very, very patient, right, with this process. We're not in the same market we were in October and November. That's for sure. A lot of sideways action. Well, look at the SPY. I mean, it's just a lot of sideways action. You're not getting the moves that we've been getting in the past. What do you guys like on the chat? Let's take a look there. We do have Futu. Fabio on YouTube is giving us Futu this morning. Man, they were down big, right, on Friday. I remember that. I forgot what the news was. Something came out and hurt them pretty bad. I forgot what it actually was.
Regulatory stuff with China.
Yeah. So they got a big gap down here today. They're pretty flat right now. I mean, I just don't know. It can go either way, really. But it could set up nicely for a continuation, right? If we're gonna find some support here or a drop, it could set up nicely for that. But you got to give this time. I actually would like to see what it does after such a big drop on the last trading day here. Heading over to not a lot of that's exciting today. I agree. As Norm mentioned, not a whole lot that looks great this morning. Let's take a look at Apple. Apple has a volume 876. I'm just going to ask some of our usual suspects here, and that's going to be Apple and Nvidia. Nvidia is going to be one that has been trading very well, has been moving, has been getting the volume. So I definitely going to add Nvidia to my list. So that's my list so far, guys.
Let me
SQ.
clarify on what I
Yeah.
was saying too. I think
Sure.
we're going to have good trading. I think it's just going to take a little bit. People want to maybe come back and see what the market's going to do before they start really moving things. So I think we could have good trading today and this week.
Yeah. 100%. I agree with that as well. 100%. Qs are up. Yeah, Qs are up here slightly. So just shy of 1% at the moment. So yeah, Qs are up as well. All right, guys, let's get over to our community events and announcement. What's coming up for this week as we kick back our webinar. So that's going to be exciting. A lot of fun stuff happening this week. Let me just get you guys to the right page here.
Yeah, busy.
Yeah. Yep.
Go out of chronological order for what's going on today. Tonight, you've got the makeup of the onboarding and technology since the markets and we were closed yesterday. That'll be at 8 p.m. this evening, especially for newer members. Be sure to go check that out with Carlos. Then strategy, which is usually at 8, will be at 5 with Eamon due to his time zone. He's going to be talking about reading price action. The following week, Andrew will be talking about the 920 trade book strategy next Tuesday, 8 p.m. Eastern. Wednesday, psychology. This week, we've got Dr. Kenneth Reed at 8 p.m. He'll be back, and he's going to be talking about thinking in bets and using probabilities to your advantage. Then the following week, the return of Kreda. She's been gone for a while because she was on vacation for a couple weeks. Then we had the holidays. So check her out on the 11th at 5 p.m. talking about how to find your mental edge. All right. Thursdays, we've got mentorship with John at 11 a.m. and Thor at 8. TradingTerminal.com. A lot of great stuff is coming here, guys. Been working hard on it. Artie's been in the background just doing a ton. So be sure to check out TradingTerminal.com, where you've got a bunch of free tools that we have created and providing to traders. Everything from scanners to replay simulator to all kinds of great stuff. Be sure to check that out. And then boot camp, guys. Boot camp starts next Monday. Just 1 week left. We've got a few spots left. Check it out this time around. We are focusing on mentorship of traders. You can trade your own account. You can trade sim. You can trade live. You can trade however you want. We're keeping it a much smaller group. There will be some one-on-one time. The small group stuff will be much smaller groups. You'll be doing live trading a couple of times a week at a minimum, where we're going to have set up with like a Zoom meeting type environment where you can see each other. You don't have to go on camera if you don't want to, of course, but trade live with the mentor at different times of the day, not just the open. We'll have some different styles and stuff. You'll be able to talk and everything else. So yeah, be sure to check that out, guys. It's going to be a great session, and looking forward to it. Don't forget about San Diego, the Trading Summit, March 2nd and 3rd. Be sure to sign up as soon as you can for that. Tickets are limited. We are changing our prices very soon. It's happening this week. It's just when we can get the tech part of it done. We currently still have the holiday discount, so if you have not taken advantage of that and you'd like to, get in before it goes away in the next couple of days.
All right. Thank you very much, Norm. Okay, guys, let's get to it here. Let's take a look at this list and see what we got going on as far as levels and what we're watching this morning. So right now I have SQ, I have PayPal, I have Baba, I have Tesla, Apple, and NVIDIA. So a few of our usual suspects at the bottom here. And Baba seems to be moving nicely right now, trying to get above this range. So that's good. I like the way this is setting up. Again, I think if one of these Chinese tickers is going to be nice to watch, will be this one here, Baba. So let's get some levels in. There are some of our possibles. We have Billy here for possible breakout if we can get the volume. We have XBEV as well, and we also have Futu. So a little bit early. So if you guys have any questions or anything else you need me to look at, we can definitely do that. I think Apple might be the next big name to get killed, says Plasma Lab. I don't know. I don't know. I mean, they're down a lot, man. They're down a ton already, right? So just kind of been trading with the overall market. So as far as getting killed, do you mean this more downside, or you mean this ticker itself is going to have some bad news is going to drop them like we're getting with Tesla, right? What do you mean by that? But we'll see. We'll see. I mean, they're down a lot already, just kind of following the overall market, right? Like many tickers have it, except Tesla. Tesla's got its own issues going on. As you can see here, starting in September, this thing has just plummeted, guys. I mean, we're hanging out at 300. We saw some downside and has not stopped ever since. Down at 109 is the low now. That's the lowest we have for the last for the 52 week, at least, for sure. So yeah, let's see what happens. Let's do levels. And as I'm doing this, if you guys throw out questions, we can definitely get into them. Andy says, did Santa get you everything you wanted for Christmas? Well, he didn't give me the Christmas rally. I got everything else except the Christmas rally. I was looking for that. Uh, but that's okay. All right, let's do here. SQ, high of the pre-market right now is kind of being tested at the moment, right? 65.50, trying to get above that. We had a little bit of a touch here earlier on. It's just kind of flirting with that right now. So I'm going to mark that there. I think this will still be a good area to keep. And the reason why, if you look at the daily, I mean, the daily is just telling you this is a level you want to have on your charts, right? I mean, just look at the resistance, a little bit of support, more support. Here, it just kind of blew right through. That has some really big days, and it just went right back down. So very interesting there. And then again, more resistance, a little bit of more resistance and support. So this 65.55 obviously is important for SQ. You want to have that down on your list. Heading towards the top, if we can get going here, 68.59 is another good area. And then towards the top, you got 72.28, and all the way up here, guys, 75.73. So we know if they get the volume, they can move very well. We've seen them, trade great in the past. Not the best trading ticker there is, but when they're in play, they can be tradable. I'm not good at trading SQ. I'll tell you that right now. I probably usually stay away from it, but they can trade very decent. Here is PayPal, guys. So PayPal also up 2.8 right now, 255,000. We got to give this again, both of them, SQ and PayPal. We got to give them a little bit of time after the bell, right? So right now they don't have a whole lot of volume. They're gapping up pretty decent, especially SQ on some news. So we'll see if that can get going, especially at the bell. So 73.89 is the high of the pre-market on PayPal. Above that, we do have 77.60. And that's going to be two pretty good levels towards the top there. Now, this is a big move, right? 73.87 to 77.60. I want to have a level in here if we could find one. And I think there is one right over here, guys, around might be 75.50, 75.35. Might be in that area. Again, I think there's a little bit of stuff happening here, a couple of days bouncing off of that. So I think that's worth marking down before we get to the big one, which is 77.60 there. So towards the bottom, guys, I'm only going to mark down the low of the pre-market at this point, 71.90. Below this, guys, you're set. Highs and lows for the last two trading days, doing an excellent job down here for you. Do not need to add anything else, right? Let's keep it simple and clean when it comes to these charts. Before we look at Baba, Phil is asking, what do I think about ARK? I don't think much about it because I don't really watch it or know what's going on with it. This is it right here, right? What's going on with it? I mean, they're down quite a bit, as you can see here. Is it time for things to turn around? Maybe. Who knows, right? Who knows, right? So I don't follow it enough to understand, not to understand, to kind of know what their value area is and how things are going. But you can see they're down at some levels where you might find some support here, depending how the underlying stocks do, right? So that's the thing. You got to kind of know what the underlying stocks is here to see how this stuff is doing, right? Because I know she has a certain thing that she's looking at, but overall she's doing worse than what the SPY is doing. So I'm not sure. There must be some really heavy, risky stocks here. Maybe some Tesla. Does she got Tesla on there? She's heavy on Tesla. That could explain some of this. But man, yeah, she's taking a hit here. So again, there's not much for me to think about without knowing, without following this and understanding what the plans is and what are the underlying stocks that make this thing move, right? So just do your homework before you get into this, thinking that we're at a value of $31, which we might be, right? But just spend 20 hours doing some research, right? 20 hours, I think, is enough research for you to really get a hold. Okay, look at different things. Is this worth me getting into? Because I'm assuming you're thinking about this in the way of investing, right? I don't think you're thinking about day trading, because if it's day trading, I'll tell you this is not worth it at all, right? So any type of investment you're looking to do, just do some good research. Look at different people that are for it, are against it, and then weigh out your options there. So it's very, very important. It takes time. It takes time to do that. It's not easy, but if you want to do this right, that's the way to do it. But right now, it can really go either way here. Let's take a look at it, Baba, in the meantime, as we get more questions here. So Baba, right now, we're in an interesting range, right? We haven't really fell off or haven't really gapped up or ran here. We got this level at, what is this, 90? This is 89.53, so that looks good there. And then towards the bottom here, we do have 86, right? So we kind of been either within this range here or this one up here, but we spend a lot of time in this one down here, as you can see, right? And then the other range we have is going to be this one. The higher range is this 94.63 looks like, right? So we're in this range now. Could be possible to get to 94 if we can get going. I don't think we'll break out for that. We're going to need a lot of stuff for that to happen. But the volume is there, guys. 1.3 million shares traded, up 3.4. If we can see some strength today, I think this 94 is possible, and that could be nice. So I do like that on BABA today. It's been a little bit predictable on its range here for the last couple of weeks. So 95.06 is the top of this range, and then we have the high of the pre-market at the moment sitting at 91.08. So I'm going to slam a level right on there also. And then once you do that, maybe low of the pre-market, I think you're pretty much set on this thing. We just need a direction at the market open. A lot of these Chinese tickers have the same situation where they gapped up and just kind of have gone sideways for the most part, not really giving you a whole lot at the moment. So just kind of waiting around to see what the overall market, I'm sure, is going to push this one way or the other here. So that's BABA. We do have Tesla on deck as well. Again, very, very active. Love the pre-market for Tesla, all the way down here at 115. So we'll slam a level there. I'm also going to mark this one here, 116.70, 69. I know it's not the low of the pre-market, but you got a couple of things happening here. I think it's worth marking down. And also, this thing moves so much that your level can be, you can have several levels within your high and low of the pre-market, because your high is 121, right? Think about this. Your high of your pre-market is 121.23. And your low of your pre-market is 115.94. So that is a big, big range there you got on Tesla. This is why you got to be careful with the number of shares you take here. You don't need to take a whole lot to make a whole lot on this thing, right? So be very, very mindful of that. Manage your risk accordingly. Outside of this high and low of the pre-market, we do have towards the bottom the low right now at 108, looks like 108.32. We'll slam a level there. And then also here, 112.83. I'm going to mark that there. Awesome. So more bad news for Tesla, downgrades below what their price is right now. So that is not going to be fun for them. Down 3.5, and volume has been, in the pre-market, the volume has been just wild. Already already 6.7 million shares traded and climbing very, very, very aggressively here. The volume, not the stock. Apple, guys, it's not really in play, but it's one of my usual suspects. They got the volume. If the SPY is going to do something, this thing is going to definitely get going here in that direction, whatever the SPY decides to do. The Qs, 131.46 is the high of the pre-market. Above this, we do have a nice level, 134.39, so we'll slam that there. And then over here, over at 136.79, a good one as well. So surrounding that, you're pretty much set towards the bottom. You do have the highs and lows for the last two trading days. You have the previous day close. So you got a whole lot of stuff happening there. Good, guys. That's our list so far. Let me just skip over NVIDIA, actually. NVIDIA, very similar to what Apple is doing, right? Which is one of our usual suspects here. I'm waiting to see if the market is going to move this one way or the other. These two can be, alternative to trading the SPY, or you could just trade the SPY overall, right? You could do that also. But these are some alternatives that you can use if you want to trade something different. You can trade on those. So right now, NVIDIA, I'm adding 150.98, high of the pre-market, actually 151. And then towards the top, I do have 153.25 is another level towards the top there as well. So, and actually, where the price action is now slightly above this, 148.50 seems to be something. I'm going to mark that down too, because you have a lot of touches here as well. That 148.52, pretty close to some of the support that you saw here, right? When we opened up here, drove this thing all the way down right about this area, then bounced back a little bit. Same thing here, opened up, drove it down to 148 and found some support there until we finally. This would have been a great trade if you were paying attention here. We finally broke down from that level. Look at that drop that we got there. So that 148.50 worth noting and having on your charts this morning. The price is really just laying flat right there at the moment. So we got a couple. So you're asking why BABA is up? Yeah, we got a couple of Chinese tickers that are up this morning, right? You got XBEV, you got Lee. and Billy. Neo is up 4%. I mean, there's a ton here. Baba, PDD, they're up slightly this morning. So Baba is probably the same thing, but out of all of these, I think Baba probably will give you the best opportunity. Again, that's just based on how they trade, but we will know more at the market open once this thing gets going here. All right, what else you guys have? So yeah, you got a usual suspect here. You're looking at Amazon, Meta, Tesla. Yeah, it's all usual suspects, which are really good to watch. Again, I don't think they're doing their own thing. We'll look at Meta here. Meta right now, again, pretty quiet for the most part. Again, up 1.4, 304. So not doing a whole lot. I think it's just going to depend on the overall market really for this one. But Meta's interesting, guys, because I always say this thing, the recovery was a lot faster than what I thought. So a little bit of an overreaction, this gap down, and the following days, I did not expect this drop to continue here into the gap down, and after the gap down, recover in a couple of days, man. A couple of days, it really did some good recovery towards this gap down, and then it's just been moving sideways here. And there are some marketing people that are talking about Meta coming back as far as content creation, because now their ads just became really cheap. So what happens is, right, these guys make money off their ads. So many companies left Meta, right? So now companies might come back because the price is going to drop as far as advertising. So it's a lot of content creation that are projecting that Meta and Facebook are going to pick up here when it comes to content creation. So interesting concept. Got to look out for that and see where that goes, man. Eric, BBBY, BBBY. I see volume, but man, this is hard to borrow. Man, Bed Bath and Beyond, hard to borrow. Can you believe this? Down at 259. Yeah, I mean, this is just messy. This is messy. It really is. I mean, I don't know what the news is. They do have some significant volume right now, 1.6. So if you have the news, throw that out there. I must have missed it. But I just don't know how you trade this, man. It looks pretty wild right now. I personally would not be watching this one. Under $5 too. So under $5, under $10, you start getting a little funky as far as the price action. And BBBY says, I haven't traded BBBY in a while. Even when we had this mess here, right? Obviously a short squeeze, the 28. I don't think we traded this. So just be careful on that one. ABT, no. Nothing happening here. And even if it was, you did get some volume. This is one of those stocks that are tough to trade. They're very, very difficult to read the price action. So I usually try to stay away from this one. It just doesn't trade very well. Again, I agree with Norm 100%. I think we're going to have a great trading week. Might not start today, but I think that we just got to give this a little bit of time to kind of see what the sentiment is out there as far as the SPY. The SPY is very active this morning, has a nice range at the moment, is on top of this range that we've been kind of stuck in for the last couple of days, right? So if we're on top of that range, that's a good sign there. Maybe we'll get a nice little push up or slam down, whatever it is. I think the SPY is looking good for some move and not just some sideways action. Might not happen right at the bell. We might just give it a little bit of time for it to get going. We need some questions here as we get into our trading for today. Didn't think BBBY will make it to 2013 to 2023. It made it. It made it. It is here, my friends. Somehow snuck right in, and is they're not bankrupt yet. They're right in there. So just wild. You gotta, man, it's a tough business. It's a tough business. Online has really online business is doing to these retail stores what Netflix did to Blockbuster. It's just not good. Cole, that's correct. You need to adapt, and you need to have people that are going to be very creative and come up with a way to compete. And Best Buy did that, right? Best Buy did that. I was concerned they were not going to make it, and Best Buy figured out to rebrand themselves. And I love going to Best Buy. It's the only store you really have that has electronics like that, unless local shops, right? And they found a way to stay alive somehow, right? They did a lot of rebranding, a lot of things to keep them afloat. And if you did not do that, man, you were in trouble. Who buys from BBBY? The prices are outrageous. I mean, I don't shop there, but I don't know if the prices are how the prices are. Remember the Sears catalog. And so in Hackensack in New Jersey here, they have a Sears tower, not the one in Chicago. That's different. But here they have a really old Sears like tower and clock and everything. It's still there, but man, a Sears is a store that really fell apart. Jeez. Um, but they didn't adapt. When they still had time. You go into that store to look for something, and there was nobody around asking you for help or this and that. It's just you can't do that. It's just you can't have that. You're not able to survive in a business that you walk in and there's nobody. It felt depressing going into those stores, right? Kmart, same thing. Yeah, you went in there. It's like, what? This is depressing, right? So you got to adapt quickly. All right, guys. Any other tickers you want to look at? Yeah, BBBY is Bed Bath and Beyond. Malls thriving in South America so different from U.S. I mean, the malls here in Jersey, at least, they're always packed. I mean, the economy could be in the crapper, and there's no parking in the mall. I think people just go in just to walk around. I don't know what they're doing, but the malls are packed. If you guys live in New Jersey, if you go to the Paramus Mall, Paramus Park Mall, or Garden State, it's packed 24/7. I mean, I don't understand. I don't understand. So, it's there's no lack of traffic, that's for sure, in these malls here. Let's take a look at Neo. Neo right now. Yeah, Neo is one of the ones that is gapping today, but Neo, man, it doesn't look good. It's up 4% right now, 1.5 million. I just don't see anything great on this. I think Baba might give you a better opportunity. I like the daily better on Baba anyways, because at least, although you're going sideways here, you are getting some movement, which is nice, right? So you are getting some movement here. A couple of times it gapped up, sold off pretty nice, as you can see. So we'll see. We'd love to see a strong open today. Kind of get that New Year's let's go rah 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 type thing. Hopefully we get some of that and we can see some of these things push towards 95, and then we can sell off again towards the end of the week. But let's start the year off at least with a green day on the SPY will be nice, right? Let's get something pushing higher here. SPY right now slightly up, but down from the highs this morning, right? Quite a bit, right? From 386. So let's see if we can hold here. I like their setup right now above the range, right? If you look at the range here, you're looking at 384 and you're looking at 370, 380, 378. So just slightly above that. If we can head back up there, that would be nice. We would love to see a nice push this morning to get things going. Tesla moving, guys. Low of Tesla 116, now at 119. Man, I was thinking of getting in here earlier before the pre-market. I was thinking of getting in here long, but I'm like, you know what? No, I don't want to be in a trade while I'm doing the pre-market show. It's not a good thing. I haven't done that in a while, and I don't want to do it now because then you can't focus on what you're doing here. Rafsila said, soon 900 for Tesla. Who knows, man? I would not put nothing past this ticker and Elon Musk. So who knows? Our list right now, guys, we have SQ. Let's run through it. SQ right now pushing up against their high of the pre-market 65.50. You still want to keep that there because you do have a couple of days that are using that as support. But that looks good. SQ looks nice today. Looking forward to that one at the market open. We have PayPal. PayPal here is pushing as well. Not doing a whole lot right now. At the market open, these two, be on the lookout for them. Let's see if they can get going. Baba, I do like as well. Tesla, we just talked about, so that's good. Apple, usual suspect, and also alongside NVIDIA for a possible play if the market does start trending. Screaming Z1 says, my first day off a simulator, but I might continue to trade in sim today. That's great, man. That's great. So your first day trading live is going to be today. Congrats. And, take it easy. Be patient. And it's okay to be nervous on those first couple of trades. That's absolutely perfectly fine. So just try to keep cool and follow your rules, man. For those that are starting out brand new to trading now, if this is your first time trading live after a couple of weeks of simulator, just make sure that today your first trade does not have to be green, right? Don't feel that first trade, that first day is going to determine your trading career, because that's really a bad thing. Whether you have a green day or red day, is really a bad way to gauge what your trading career is going to do, right? So if you have a green day, doesn't mean that that you figured it out and that it feels great, right? It builds that confidence, but try to not get overconfidence that, hey, you figured this out and now you can go YOLO dolo. No. Don't do that. Take it easy and trade small. We cannot stress how you got to trade small. I know that many of you guys, you're coming from jobs where you made good money, or, trading a $5 risk, $10 risk seems like, what am I doing? I'm wasting my time. You're not. You're building a foundation, right? You're building a foundation so that you can hopefully build higher as you build your risk and build your risk tolerance and build your skills, right? So very, very important. So guys, onboarding class tonight as well. Do not forget. So we didn't have it yesterday due to the holidays, but tonight onboarding class at 8 p.m. And then we also have our guy Eamon, our man Eamon, doing a 5 p.m. Strategy workshop today. So again, just very important. And then on the other side of that, right, if you have a red day today, doesn't mean you suck and that that you need to quit trading, or that's it, this is not for you, or trigger other revenge stuff, right? Just your goal today is just to go in there, place your first trade, make sure that everything works properly, follow your rules. That's all you have to do. That's all. Take 1 or 2 trades and just be done for the day. Call it a win and come back tomorrow, and then do that every single day, right? From there on, it's easy. If you're allowed to let yourself be disciplined, this can be I don't want to say easy because it's not, but it gets very, very easy if you can be disciplined quickly. All right, guys, 9:14. We're all set here. Let's take a look at what our moderators have thrown out here. I only see Jared so far. We'll see if we have some other ones that are sharing their list with us this morning. And as we kick off this new year, guys, I'm looking forward to this week of trading, this year of trading, and it's going to be very, very exciting. Let's go ahead and disable this video here, and we're going to bring over our moderators list. Okay, perfect. I see that coming in. Thor, Megan coming in with their list this morning. Love that. Let's go over here and bring that over. And if you're first time joining us on YouTube, guys, we do this every morning. The market is open from 8:30 to about 9:15, around this time now, right? Jared comes on at 8 o'clock. Actually, no, from 8 o'clock to 9:15. Jared comes on at 8 o'clock Monday through Thursdays. And Norm and I at 8:30, from 8:30 to around 9:15. We set up our list. And then in our chat, we continue trading live all the way to 4. Everybody comes on. Brian and Andrew at the open, Thor at times covering for Andrew, and then the entire day we have trading. So definitely join the party here if you want to trade live with us. So right now we have Jared. He's looking at Baba. He's looking at PayPal and SQ, right? Some information there that has been released. Coin as well. So Coin is on his list, and then secondary list Tesla, Chinese EVs with delivery numbers out today. So we'll see how that plays out this morning. Megan is looking at Meta, NVIDIA, Thor, Amazon, Tesla, SPY, Qs, and Baba. Susan will be looking at Tesla, Amazon, NVIDIA. Secondary list is Meta. And our guy, Brian, our main guy here, is looking at Tesla, Lee, SQ, NVIDIA, and RMED. Oh, we got it for fun to start the year, guys. There we go. Let's hit that thumbs up over for Brian. He's giving us a for fun stock. And for those that don't know, when he says for fun on any ticker, is usually really, really risky, or it's a low flow, or something that he's that you can probably be, if you're not experienced, probably stay away from. Or it could be entertainment purposes. Like right now, this one, not a whole lot going on, but it had a couple of really interesting days here from 375 to 6. So again, be careful on this RMAD. This is a for fun from Brian. All right, guys, 916 over on YouTube. Thank you so much. Hit that thumbs up if you haven't done so already. We'll see you again tomorrow at 8 a.m. with Engineering the Markets. Don't miss it, and have a great trading day, guys. Remember, for those that are trading new, be patient today. Your job is just to get in there, do a couple of trades, 1 or 2, and just call it a day. Red or green doesn't mean anything. You're just getting, those nerves out of the system as you take that first trade. So take care, guys, and we'll see you tomorrow.